All right, today we are diving into a topic that, honestly, it feels like a secret that's hidden in plain sight. We are going to unlock the tax code to figure out a really provocative question. How is it that the wealthy often pay way less in taxes than the middle class? Well, the answer? It's hiding in the rules of the game itself. So let's just start with the biggest question of all. Is it actually possible to legally pay $0 in federal income tax? Not just one year, but year after year. The answer might just surprise you. And let's be super clear right from the start. We are not talking about anything illegal. This isn't about cheating the system or committing fraud. And it's definitely not about hiding money in some secret offshore account or trying to conceal your income from the government. No, it's about something much simpler, but also much more powerful. It's about knowing the rules of the game. It's about understanding the system so well that you can play it to your advantage, completely and totally legally. So, okay, what are these rules then? Well, the very first thing you have to understand is that the tax code, it's not really there just to collect your money. It's actually designed for something else entirely. And this quote right here, it just nails the core idea. The tax system isn't really designed to be fair. It's designed to be a massive instruction manual from the government, built to reward specific things they want you to do with your money. Think about it, right? The government wants people to invest in the economy. It wants you to buy a home. It wants people to start and grow businesses. So what does it do? It builds rewards, tax breaks, directly into the code for anyone who does those things. All those thousands of pages of complexity, that's not a bug, it's a feature. And this brings us to a really important term, tax avoidance. This is the completely legal practice of using the tax code exactly as it was written to minimize how much tax you owe. It's not about finding sketchy loopholes, it's about following the roadmap the government itself laid out for you. Now, this is where we have to draw a super clear line in the sand. Tax evasion, that's hiding things, lying on your forms, breaking the rules, that'll get you in a world of trouble. But tax avoidance, that's using deductions, claiming credits, setting up legal business structures, that's just smart. The wealthy don't break the rules, they just know them better than everyone else. Okay, so this leads us to what is probably the single most important concept in the whole playbook. The government treats different kinds of money very, very differently. Just look at this chart. There are basically three types of income. You've got earned income, which is your salary from a job. That gets taxed at the absolute highest rates. Then there's portfolio income from things like stocks, which is taxed lower. And then you have passive income from assets like real estate or a business you own, and that is taxed the lowest of all. This right here is why a surgeon earning a huge salary can end up paying more in tax than an investor who makes millions from their assets. It's not about how much you make, it's all about how you make. So that brings us to the playbook that business owners and investors use. And the secret here isn't just about what kind of money you make. It's about when you pay tax on it. And believe me, this one little difference completely changes the entire game. For most people, the process is simple, right? You earn your paycheck, the government immediately takes its slice for taxes right off the top, and then you get to spend whatever is left over. It's a path that kind of puts you at a disadvantage from day one. But check this out. For a business owner, the sequence is completely flipped. They earn money, then they spend that money on all their legitimate business expenses, things they need to operate and grow, and only then do they pay tax on whatever profit is left. This is a monumental shift. It's a total game changer. And you might be wondering, well, what counts as an expense? A lot. A portion of your car, any travel you do for the business, new computers, your home office, classes you take to improve your skills, marketing. So many things you might already be spending money on can become tax deductible when they're run through a business. Okay, so now let's level up. Let's get into the really advanced strategies, the stuff used by the ultra wealthy. This is where we talk about using assets and something called paper losses to legally and completely wipe out your tax bill. So one of the most powerful tools out there is something called depreciation. Think of it like this. The government lets you pretend that your investment property is slowly losing value over time because of wear and tear. So you get to deduct this phantom loss from your income. But here's the magic trick. While you're claiming a loss on paper, the building's actual value in the real world is probably going up. This creates this incredible situation where you can have zero taxable income, even while that same property is putting real cash into your pocket every single month. Now here's another simple sentence, but it is incredibly profound. When you take out a loan,
That money you get, it is not considered income by the IRS.
And what that means is if there's no income, there's no tax. So instead of selling their stocks or properties and paying a massive capital gains tax bill, the super rich do something different. They just take out loans against those assets. They can get millions of dollars in tax-free cash to live on, all while their original investments just keep on growing in value. It's a perfectly legal and unbelievably powerful strategy. So look, if all of these strategies are perfectly legal and they're written right into the tax code, why on earth doesn't everybody know about them? Well, the answer really lies in how we're all taught or not taught about money. Just think about the standard path most of us are on. School teaches you how to be a good student, how to get a good job, but it doesn't teach you a single thing about tax strategy. Then your first job immediately locks you into that earn, then tax, then spend cycle of an employee. Your whole career can just reinforce that mindset, never even showing you that there's a whole other playbook that owners and investors are using. And really, that's what it all comes down to. You just can't win a game if you don't know the rules. Taking control of your financial life, especially when it comes to taxes, it all starts with learning how the system is actually designed to work, not how we think it works. Let's just end with a hard truth. The tax code was not written for employees. It was written by and for business owners and investors to reward the things that they do. But now you've had a peek inside their playbook. So the real question is, what are you going to do with that knowledge?